Hello everyone, a very good morning, afternoon and good evening to all of you. This is your host Vaibhav. In today's session of the webinar, we will be considering this Doji formation, the Doji candlestick formation, to see how we can utilize this candlestick formation to look for the opportunities which we feel or which we naturally have the probabilistic pattern where we are likely to make money rather than losing money. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. There is a Euro USD chart with each candle period defined at hourly time frame. And since the market has started for today's session, we didn't really see much movement, but now there is this decline of around 20-30 pips after this consolidation phase. But if we have to trade, we do need to have a formation which is likely to give us the idea of the momentum, and that's where these doji formation comes into play. If you want to know where this is listed, there are two options given to you. You can use add indicator, or even if you do a quick search, you will get it. Simply type in the doji. Okay, and here we have multiple types of these doji based candle formations, and in coming sessions I will be explaining to you these uses one by one. Now we look at the basic formation, the first and foremost doji. Alright, and if you want to know where this formation can be found, if you were to go through the list, here it is: pattern recognition. Okay, just below the dark cloud cover. Now, Doji, as the name suggests, and if you are familiar with the Japanese language, the name itself gives away what it means. It means nearly the same, and this formation takes shape when we have the closing and the opening value which are nearly the same. Now, this is the ongoing candle, and since this candle has just started, we will have to eliminate it. But if we go back in time, here we had this doji formation at 13 GMT. Prior to that also, we had this multiple doji candle formation in today's session, and this has happened more frequently simply because in general the market hasn't really gone anywhere. It has moved in a manner which denotes this more and the same approach. Now if we consider the last week's price formation also, we saw the markets were mostly trading sideways, and as a result of that we have these multiple doji formations. Now if we look at these indicators, the candle formation, the one thing which has to be kept in mind is also the shadow of this candle, as we have this formation where the opening and the closing price is nearly the same. And suppose if we don't pay attention to the candle shadow, then it becomes very difficult. And even in its natural state, this formation is trend neutral. It doesn't really tell you much about whether the current trend is bullish or bearish or simply sideways. You have to take this formation and use it in conjunction with other trend defining factors or indicators, and with that you get a good idea. This formation can be utilized to see if the existing momentum has reached a stage where the reversal is likely, or if even we can consider the fresh reversal using this formation. Now in this kind of scenario where we have this long shadow on the lower side, it simply means that when the price had dropped on the lower side, the buyers jumped in and pushed the price back to where it was at the start of the current candle period. So this means there is a buying momentum on the lower side. So this is more of an continuation pattern. Now if we reverse the scale and see this kind of stage where we have the shadow on the upper side, now this means we have many sellers on the higher prices if and when the price starts to rise again, the sellers are pushing the prices lower. So that means the momentum is more favorable to the seller. So if we use this whole formation in conjunction with the shadow and this closing and opening price levels, we do get a good idea. And also if you simply add some indicators like for example a moving average or even any oscillator, you will get to know how things have shaped up, what is the trend, and if the current formation is pointing to the continuation of the trend or a reversal of the trend. Now if we use simple tactic like lower high and lower low. Suppose if we simply look at this chart from here onwards with this formation, then you can say that this is signifying a continuation pattern with the momentum being bearish. And if you were to take higher time frame series, and then in that scenario it is not really a formation of the lower lows, rather it is a formation of higher lows. Now this formation, the same formation, will mean the possible reversal. So a lot depends on how things are interpreted on the trend side, and then you can utilize this candle formation to get you the optimum entry and exit points. So in that sense this formation is trend neutral. All you can do is combine it with other setups, data points, the price action data, and then you can come up with a better optimum trade entry or the exit point. Now let's consider some of the bullish examples. So let us look at the candles in which we have the closing on the higher side as well as there is long shadow. So this example I have found. Now the things here in this case were going mostly sideways, and then this candle happened. The price didn't really go much anywhere. Again for next couple of hours it continued to trade with the similar price series, but this formation gives you the idea that on the lower side, as this price dipped, the buyers jumped back in and pushed the prices back up again. So this is also a area where you get to know that there are buyers awaiting for the prices to drop, and if next time around the prices again drop toward this similar area in in coming hours, then we will have the higher chances of getting the trade right. So here in next couple of hours we did saw the buying momentum as and when the price dipped again, and this time then the reversal ensued and it went on to climb quite well, quite substantially. So this kind of continuation pattern can also be found, and it helps you figuring out the entry if you are taking other factors into consideration for defining the trend. Then you can use this kind of information. Now let's consider some of the instances where there is no shadow and the closing and the opening price is nearly the same. Now if we consider this multiple instances, leave this out here. Here also the shadow is very short. In this case also there is not much of a shadow, and this closing and opening price is almost the same. Now this signifies there is lack of momentum. There is not much of an enthusiasm amongst the market participants, and as a result of that the price is not really going anywhere. It is simply stale market conditions where we don't really have any particular reason for the prices to move much, and as a result of that you have these closing and opening prices which are almost the same, nearly the same. And if nothing else, this candle formation can be utilized to simply decide to stay away from the market, as it signifies lack of interest amongst the larger market participants, and that tells you something about this prevailing situation. And if you combine it with other technical factors, you get a good idea that these are the times where it is better to simply sit on the sidelines rather than burning your money by paying commission and the spread. It is never a good idea because the cost of commission and spread is also quite high many times. If the market doesn't really go anywhere, then we can lower the account equity simply by going for multiple trades. So this formation helps you in avoiding that kind of scenario also. So this is a useful situation even when you want to read into the lack of enthusiasm amongst the market participants. And in a subsequent session, we will be looking at the types of this doji formation one by one. So we will get into the details. We will see how we can optimize the trades while trading with the trend for the uptrend as well as for the buy trend, bullish or the bearish scenario. So that is something for a subsequent session. Now I will have to see if there are customization options available to us. There is nothing we can do about the input, so there is no input options customization possible. What we can do is customize the output, and there are two options to customize it. Maybe you can go for this kind of filling up of the candle in the same color, or you can go for this bracket formation while this original candle stands. So that is a possibility. You can also play around with the color combination if you feel like. So this is also a possibility. Transparency factor can also be applied. You can go for increased or decreased transparency. The advanced editing option, this is also not going to cast much of an impact. Highlight the time period zone, only single time period, single candle period is going to be highlighted. We can't really customize this. If you want the indicator to be available on all the candle periods, then you have to opt in for this option. Else, you have to look at which candle period you want this formation to be available, and only on those candle formation this formation will be visible only on these time frames. Now here I have chosen 15 minutes and hourly, so only on 15 minutes and hourly we will have this formation being identified by this combination. Now if I change to half an hourly, you won't see any doji formation on the chart. Okay, so guys and girls, this is all from my side for today's session. If any of you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. And in subsequent session I will be explaining to you the various types of doji formation. So this is all for today's session. Thank you all for joining in. Have a fabulous day ahead, and of course see you tomorrow. Goodbye.